China comes back tonight. Silver is sitting at $88. And the last 2 weeks have not been random volatility. They have been under pressure, real pressure, the kind that tests whether a move was hype or whether something structural is shifting underneath the surface. Right now, the Shanghai market is about to reopen after being offline, and what happens in the next few hours could define the next leg for silver. If you think this is just another normal trading day, you're not paying attention. Welcome back to Past and Profit. If you value clear breakdowns without hype, take 2 seconds right now, hit like, subscribe, and make sure notifications are on. These markets are moving fast, and when moments like this show up, you want to be early, not catching up. Let's start with where we are. Silver is holding around $88. Over the last 2 weeks, it has been knocked down multiple times. Every push higher met sales. Every breakout attempt got smacked back into range. But here's what matters. Each time it dropped, buyers stepped in. The dips did not collapse, they were absorbed. That tells you something. Weak markets don't absorb pressure. Weak markets break. When price keeps reclaiming levels after repeated hits, that usually means real bids are sitting underneath, not just momentum traders chasing a spike. Now add tonight's catalyst. China comes back online. The Shanghai Futures Exchange reopens after the holiday break. For days, Western markets have been trading without direct participation from Chinese flows. That creates a gap in positioning. When Shanghai reopens into a higher global price, one of two things usually happens. Either local traders chase the move and confirm strength, or they fade it and force a reset. That's the tension in the air right now. From a short-term structure standpoint, 89 is the level to watch. Not a quick spike above it, not a wick. A real body, close above 89 on strong volume. That would signal that the 2-week pressure phase was consolidation, not distribution. If silver fails there again and rolls back under 85, then the market is telling us it needs more time. This is not a prediction. It is structured. Markets leave clues. Our job is to read them, not to guess. If you are learning something already, comment 88 silver below. I read the comments, and it helps me see who is tracking this move seriously. Now let's zoom out. The reason these 2 weeks matter is not just price action. It's what's happening underneath the paper market. Open interest has stayed elevated heading into delivery windows. That means there are still a large number of contracts open relative to the available registered supply. Most contracts roll forward. That is normal. But every contract that stands for delivery becomes real demand on the physical side. And at the same time, warehouse inventories have been drifting lower, not collapsing overnight, but steadily draining. Physical metal leaving the exchange system is not a headline event. It is a slow burn. But slow burns can turn into fast moves when sentiment flips. Now think about the global backdrop. China is not just another participant in the silver market. It is one of the largest industrial consumers in the world. Solar panels, electronics, EV production, grid expansion. Silver demand in those sectors has been rising for years. When Shanghai reopens, it is not just traders returning. It is the world's second largest economy stepping back into price discovery. Over the last 2 weeks, while silver has been fighting around 88, broader markets have been unstable. Tech stocks have seen sharp rotations. Crypto has experienced liquidation waves. When leveraged assets wobble, capital looks for stability. Gold has been firm. Silver has outperformed on percentage terms during certain sessions. That relative strength is not random. It suggests capital rotation is happening under the surface. There's also the volatility factor. Implied volatility in silver options has been elevated. High volatility means traders expect larger than normal moves. It does not tell you directions. It gives you tension. And tension eventually resolves. The longer a market coils under pressure, the stronger the eventual expansion tends to be. Now here is where it gets interesting. The gold to silver ratio compressed sharply earlier this cycle. That told us silver was finally catching up after years of lagging gold. Recently, that ratio has stabilized, not exploding wider, not collapsing further, stabilizing. That kind of behavior can signal a regime shift. When a market stops acting the way it has for years, you pay attention. But let's be honest about risk. Elevated volatility cuts both ways. If Shanghai traders reopen cautiously and decide the global rally was overextended, they could apply selling pressure. If broader equity markets experience another liquidity shock, silver could get dragged down temporarily, even if the long-term thesis remains intact. Markets do not move in straight lines. Anyone promising you certainty is selling confidence, not analysis. The bigger structural story, though, has not changed. Global silver production has struggled to return to peak levels from the mid-2010s. At the same time, industrial demand has climbed as renewable energy and advanced electronics expanded. That gap between supply growth and demand growth has created multi-year deficits. Paper pricing does not always reflect that immediately, but over time, fundamentals matter. Now combine that with geopolitical uncertainty. Trade tensions remain elevated. Currency volatility is rising in several regions. When uncertainty rises, investors reassess counterparty risk. Silver, like gold, does not carry default risk. It is not a promise. It is a tangible asset. In environments where trust in systems weakens, hard assets tend to attract attention. And then there is the AI acceleration effect. Automation and artificial intelligence are increasing productivity, but they are also disrupting labor markets. If high-income sectors face wage compression, consumer spending patterns shift. Governments run larger deficits to cushion the impact. Currency pressure builds. That macro backdrop often benefits scarce real assets. You do not have to believe in extreme scenarios to see why some capital is quietly rotating. Tonight's Shanghai Reopen sits right at the intersection of all these forces. 2 weeks of pressure, elevated volatility, tight physical signals, macro uncertainty, and an $88 price that has refused to collapse despite repeated attempts to push it lower. If China steps in aggressively and confirms strength above 89, momentum traders will notice. Short sellers will reassess risk. The narrative shifts from overextended spike to structural breakout. If instead we see hesitation and rejection, then the consolidation continues and patience becomes the strategy. This is where discipline matters. Trading is probabilities, not predictions. Even strong setups fail, even clean breakouts retest. The key is not being emotionally attached to a direction. It is watching the levels, the volume, and the reaction. At Past and Profit, the goal is not hype, it is clear. We look at structure, we look at flows, we look at risk. Because in markets like this, emotional decisions get punished fast. So here's the bottom line. Silver at 88 is not just a number. It is a battlefield between short-term sellers and long-term structural buyers. The last 2 weeks were tests. Tonight is the reaction. When Shanghai opens, we will see whether global demand validates this level or challenges it. Stay sharp. Watch 89 on the upside and 85 on the downside. Watch volume on the reopen. Watch how the price behaves after the first hour, not just the first spike. That reaction will tell you more than any headline. If you made it this far, drop your outlook in the comments. Do you think China confirms the move or fades it? I want to hear your reasoning. And if you found this breakdown helpful, share this video with someone who follows metals but needs a clearer view of the bigger picture. These moments are where trends begin, or where they fail. Either way, they teach us something. Protect your capital. Think about probabilities, and I will see you in the next one.